You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey trader, want to get rich quick? Well, good luck with that. If on the other hand you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Thursday, 31st day of January, 2019. First month. Almost over and done. Well, welcome to the show. Thanks for joining us, whoever you are, wherever you are. Just glad to have you here, right now. I have a chart up of the S&P 500 Emini Futures. If, by chance, you cannot see the chart, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, all the way through the end of time. Well, all the way through April 10th so far. See, we just keep chipping away a day at a time. I think it's looks like it's working. So good. Glad to hear that. Also, if you're out of the office, away from the desktop, working off a cell phone or a tablet, and you want to see the charts, go to youtube.com/CFRN/live for a live simulcast of the live broadcast as it's happening live in real time. And thanks to the folks at YouTube for carrying the show. All right, this chart I have up, S&P 500 Emini Futures, real quick, like. Hold on. Okay. All right. Yesterday, we had a leg up. We had bumped up here. We had bumped up against the weekly trading zone, pulled back. In fact, we had 3 runs at this thing. 1 hit the target, 2 hit the target, 3 hit the target, and then some. Pulled back right into that weekly trading zone. If you'll recall, yesterday we had drawn a circle right there, just in anticipation of this pullback, because it was already starting to come back. I think we were on this candle. And so there it was. The Fed made their announcement, and off we go. Now, knowing how Jerome handles a microphone and a podium, we thought that we could, see a return to Eden here with his comments. He stumbled a few times, but the tail is in the tape. We did come back to test this zone pretty much to the tick. Well, no, actually we spiked it right here. Then we did a leg and a retracement and a leg, hit the zone overhead. This is as good as a hit too. Zones are an area, just like fibs. And so then we go leg and a retracement and a leg and a retracement and a leg, right back down to the zone. You got to expect it to be good resistance until it isn't. And when it's traveling this way, you got to expect it to be good support until it isn't. And then on the way back up, good resistance until it isn't. Okay, it wasn't. It proved itself. We put in a leg and a retracement. And that's just one candle. On a smaller time frame, you could see it break down the way these break down on the 30-minute. But this candle opened here, ran up here, came all the way back to the zone, and then closed here with a slightly red body, which to all the world looked a little bearish. But here's what happened since the market opened today. In fact, here's the opening candle. And then when we popped up over this zone, looked like, yeah, that might be it. But here's the deal. You can no more know the future than you can change the past. And that's the reality. So hold on to that. Now we had a final target up here at 2709, I believe it was, on the double D, but haven't seen it yet. Swing high 2708. Yeah, that's as close as we get. That's okay. All right, I got a little bit of news that I'll share with you right here, right now. TokenSoft, a US-based digital asset security platform, has announced the beta launch of its new Knox wallet, a mobile-first cold storage self-custody system for enterprises. It is designed for issuers of asset-backed tokens for equity, debt, or real estate, and it can also hold multiple cryptocurrencies. The wallet is said to incorporate 3 levels of security: offline cold storage, role-based access control, and cryptographic authentication. The developers expect that different types of companies will want the Knox wallet, including exchanges that could use it to manage and administer assets trading on their platform. As real-world assets enter the blockchain world, it's important to protect them with the same level of security we treat traditional digital assets. That, of course, is from the CEO, Mason Borda. He says, "We built Knox for our clients of all types who are launching asset-backed tokens and collectively are planning to place over $1 billion in digital securities onto the blockchain in 2019. As these assets arrive on the blockchain, there should be adequate solutions to secure them. Now, when I was a young man in the Navy, sailed the 7 seas, spent some time in Korea, Chunhae and Busan. Yeah. Never made it to Seoul. Their money was huge. Big bucks. I mean, like cartoon funny. I don't know if it's that way anymore, but because there weren't a lot of exchanges on town or exchanges that you were supposed to use, they would exchange our money off the fantail of the ship before we went on liberty. And $100, if you took 100 American dollars and converted it into won, W-O-N, won, Korean won, well, you just couldn't fit it all in your pockets. If you had a jacket, you'd stuff some in there, maybe put some in your socks or your shoes, or you might need a backpack. Especially for the guys who are in Korea, they're well known for their leather goods. And so when sailors go to Australia, they want to get a tattoo because the ink's the brightest. And when they go to Hong Kong, we want to get suits because they make great suits. And in Korea, it's leather goods. So everybody wants to get a leather jacket. Well, you would need a backpack to carry all that won off the boat, because the notes themselves are huge. They were, again, almost cartoon-like. But I digress. BXB Incorporated has announced the launch of KRWB, which is a stable coin backed by the South Korean won. This reportedly followed an initial capital deposit of 400 million Korean won, which is about $360,000 US, that has collateralized an equivalent volume of newly minted tokens. The issuers promise that each token generated will be matched with an equivalent fiat deposit stored in a bank, and that an independent auditor will perform regular checks on the KRW reserves to ensure that a minimum of 1-to-1 matching with KRWB liquidity is continuously maintained. New York-based trading platform Gemini has announced it completed a SOC 2 Service Organization's Type 1 examination. You know where this is heading, right? Auditing firm Deloitte has performed an evaluation of Gemini's security controls, which were inspected to meet the criteria set by the American Institute of Certified Public Accountants. Really, CPAs involved in the crypto world. These are very exacting, fact-finding, number-crunching folk. So to see the American Institute of Certified Public Accountants even involved in this space, I don't know, lends some level of legitimacy, I would say. Now, Gemini offers, let me quote the head of risk at Gemini: providing you with a safe and secure platform to buy, sell, and store your crypto is paramount to our mission to build the future of money. In the traditional finance and technology industries, SOC 2 reviews have become an industry standard for demonstrating security compliance. Our SOC 2 review, coupled with our digital asset insurance, is another step we've taken towards raising the bar for consumer protection, safeguards, and industry best practices. Let's look at the numbers from around the world. Let's pull in a fresh read. I just see some news here that popped up. Trump considering former presidential candidate Herman Cain for the Fed. Really? Former presidential candidate and Godfather's Pizza, I guess I didn't know that, CEO Herman Cain is under consideration for a Federal Reserve appointment. President Donald Trump is contemplating nominating Kaine for a Fed governorship. Okay, not the Fed head, but just a Fed governor. Kaine met with Trump yesterday at the White House, where he was escorted by National Economic Council Director Larry Kudlow and CNBC's Eamon Jaffers. Kaine ran for the president in 2011 and briefly led polling thanks to his 999 plan. Oh, which reminds me, today's Dr. Tom Day, 10-10-10 day, so I better kick this thing up a notch and get moving. I haven't heard from him, but I'm going to assume he'll be here. He's a pretty punctual and reliable kind of a fella. All right, let's look at those numbers and then go to Michael, get a recap of what happened in the live training room today. All right, these are cash markets. We'll start here in the U.S., and then we'll get back to the futures in a moment. The Dow's currently down 10 points. NASDAQ is up 109. That's 1.5%. S&P 500 is up 23. That's almost 1%. Now, this is very unusual to see the S&P 500 up 23 and the Dow down 18. They diverge, come back together, diverge. We haven't seen this. I've not seen this repeated behavior. Remember we had it the other day? Anyway, the Russell 2000 is up 13, almost 1%. In the commodity basket, crude oil up 90 cents, over 1.5%, trading 55.13 last. Gold up $10.60, almost 1%, trading 13.26.10. In the Asian markets at the close, the Nikkei was up 216 points, 1%. Shanghai was up 9, and the Hang Seng added 299 points, a little over 1%. In the European markets, the FTSE closed the session up 27, the DAX was down 8, and the CAC up 18. Numbers out of Europe have been small of late. So that made it a green day in Asia, a mixed day in Europe thanks to the DAX, and it's a mixed day here in the US thanks to the Dow, which is still down 18 points. Yep. Nope. Down 6. So we'll see. See if it's going to turn around and get moving. These are this week's zones. So again, yesterday, that same pattern that we had on the S&P. Pull back right into this area of support here. Up to the zone. Back down to the zone. Now trying to wind its way back up. All right, let's go to Michael, get a recap of what happened in the live training room today. Michael, if you're ready, take it away.
Okay, I am ready. Here we go. Change to me.
Gold at a 9-month high.
Okay, 9-month high. Okay.
Here
You
we are.
should be looking at my screens. I'll bring this
It's
up.
all yours.
Excellent. Okay. I will take care of it. All right. Good afternoon, everyone. Today is Thursday, the 31st day of, I'm sorry, the 31st day of January 2019. If you have not taken a free trial with us, go to the homepage here at CFRN.net. Right over here in the right-hand column, it says 5-day free trial. Apply at CFRN.net. If you click on that, you'll be brought to this page where all we ask for is your email, your first name, how you found us. Hit the submit button. Once you hit the submit button, you'll be sent a confirmation link. Okay. Yeah, once you hit that confirmation link that will get emailed to you after you hit the submit button, then we know that you took the free trial. So you got to make sure you hit that because we don't know until you actually hit that. Okay. Okay. Now, Today is the 31st day of January. I didn't even make an entry in here because I didn't do any trades this morning. I was having computer troubles. But what I will do is go over the spreadsheet for the month of January, and I'll go over all the trade setups that set up today. Okay. So we'll start out by saying we're going to end the month of January $2,031.25 over 19 trading days, averaging $106 per day. Okay. And this, same thing on the year. Okay. Okay. That is that. Now, we didn't have any trades today, but on the month, if you would have stopped trading after you got your goal for the day, there would have been 73 trades and $1,600 profit. Net profit with an $8 commission would have been $1,016. Net profit with a $5 commission would have been $1,235. That's if you would have stopped trading. If you would have done everything exactly as I had and stopped trading when the goal was reached. If you kept trading, there was 129 trades. And there was actually way more than that, but that's just what I did. And net profit with an $8 commission, just about $1,000. Net profit with a $5 commission, $1,386. Okay, that is the spreadsheet for the month of January. Now, I'm going to go over the trades that set up because I didn't do any because I was having computer issues, and I don't like to trade when I'm having computer issues. So there was a short trade right here that ran for about 6 ticks. That would have been a momentum short trade. So your stop would have gone to break even right away on that. Okay, there was a long trade over here off the BBC that went about 4 ticks, just enough to get your stop to break even. And let's see, we couldn't do anything in here in gold. And then the cycle was going up too steep to do anything over here. And then we went into the break, and it didn't do anything during the break. Okay, that was gold this morning. On the euro, there were a few spots on the euro. We started out here with a momentum short. Stop would have gone to break even. Another one, stop would have gone to break even. Then this is a regular trade, so you would have taken some profit on that, but it didn't put in a higher swing. You see, I drew that line up there to illustrate that. Then there was a short off the BBC right here. And nice profit on that. There was another one, a follow-up trade right here that pulled back 6 ticks and then went down and did what it should have. There was a momentum short right here that went down. So all that was good. Okay, and then we get into the break in here, and it got pretty choppy for a while right here. Now, this is the low of the day, and the low of the day before that was right up here, so there was nothing you can do here. All right, right in here, there would have been a shorting opportunity. Again, the low of the day is right there. So stop would have gone to break even on a close below the MA1 right there. Okay. Crude oil. Let's scroll back. All right, it started out right in here, and it was it had to break this dynamic resistance to do any momentum trades, and then it finally did, but it pulled all the way back and dragged the cycle down with it, so we didn't get any trades in there. Okay, and then that would have been a momentum short going in dynamic support, so we wouldn't have done that. Then there was a trade opportunity right here. It pulled back about 5 or 6 ticks, and then it ran up, and it had a little follow-up trade right here, and another one right there. It changed directions and started coming back down at us. This one was a momentum short, went 4 ticks into profit. Your stop would have gone to break even. Over here, the black step line had crossed below the BBC, so I wasn't looking for anything in there. Then it got pretty choppy. And come on. Got pretty choppy, and I had to bounce off the BBC right here, but I probably wouldn't have done that because I would have said it's not trending. So I would have had to wait until it got down here, and there would have been a short right there for that leg down. Okay, that short would have been a close below the trend line. And it's pulling back up right now, so it may give another opportunity on the short side. Okay, the ES. Let's scroll back on this thing and see what's happening. Okay, the ES right in here had a long opportunity, then another one over here, and then the slingshot was all messed up. And I'm just looking to see if there was anything that we could do on the short side. But there really wasn't, because we had the weekly trading zone right there. And at the end of the session, I had highlighted this morning at the end of the session that it was getting a bounce off the BBC right here, where the MA1 was blue and the cycle was blue. That's our highest probability trade setup right there. And you can see it just kept going up from there. There were a few opportunities in here as well on the long side. Then it spun around and it gave a short right here off the BBC. Right there. And again, that's our highest probability trade setup. We had red on the cycle and red on the MA1, and we bounced off the BBC. And it went down nicely after that. Okay. And that was the ES for this morning. You see my charts keep freezing up. They've been doing it all day. Okay. Back to the spreadsheet. Okay. For the month of January, we're going to end the month at $2,031 over 19 days, averaging $106 per day. Okay, it's the same thing on the year. We didn't do any trades at all today. I just stayed in there and showed everybody the trades that were coming up. Okay. If you have not taken the free trial with us, go to the home page at CFRN.net. In the right-hand column, it says apply.cfrn.net. Click on that, and you'll be brought to this page. All we ask for is your email, your first name, and how you found us. Click the submit button, and you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, we don't know that you took the free trial. Okay? Okay. And with that, I can pass it back out to fabulous Phoenix, Arizona, overlooking South Mountain, America's largest city park. Dwayne is probably currently residing in Studio A. And I still got nothing from Dr. Tom.
It's true, I am. Yeah, I was just looking to see if I got his, I think I got his number here somewhere. No, he'll pop in.
He'll pop in.
He's coming, he'll be here.
Yeah. And he usually comes into the staff section, too.
Here's another, yeah, I gave him a link. There's another thing. So he can pop right in by himself and start talking if he shows up.
Yeah.
Remember I told you yesterday about how the phones, some things live in the phone and some things live on the SIM card?
Yes.
Yeah, okay. So I just opened up contacts on this phone. And you would think it would be my contacts because of the SIM card and all that jazz. But no. If you call my number, this phone rings. If you send a text message, I get it on this phone. But if you open up contacts, it's all my wife's contacts. So that lives on the phone. Interesting. But I just tracked it with the FedEx. In fact, this morning I tracked it, and it says it's on FedEx delivery on FedEx vehicle for delivery, Phoenix, Arizona. And down below it's on. Now, as I look at the email, I look out the window, where I overlook South Mountain, America's largest city park.
Yes.
Lo and behold, in front of my abode was a rather large FedEx truck stopped in the middle of the street. I'm like, well, they weren't kidding. It is on the truck for delivery, and here it is. I go downstairs, open the front door, ready to exchange early morning pleasantries with the FedEx driver, and take the phone and get it up and running. And well, turns out it wasn't him. Which seemed a little coincidental. Yeah, it was. They didn't even have no package for us. Nothing. He just stopped in the middle of the street because, I don't know, maybe he spilled his coffee. But it's out on the truck. It'll be here by 8 p.m. tonight. And it dawned on me last night that, hey, the phone that I got wet, because I already did the bag of rice thing. It's not coming back. It doesn't look like. And it wasn't even totally submerged, but oh well. I'm just going to file an insurance claim on that one. I thought I would at least get the first one in my hands first. And I'm just going to file an insurance claim on the second one. I mean, that's why you pay for the insurance, so.
Yeah.
I'm sure that'll warrant a phone call. Hey, did you realize that you've, filed insurance claim on 2 phones in 1 week? Yep. And if I was trying to pull something over on you, I I wouldn't be so shallow. I would at least, you know, wait a week, but it really happens, so here it is. Okay. Oh, somebody just rang my doorbell. Oh, it's a FedEx truck. I kid you not. It really is.
Okay.
It's not the same
You wanna
truck.
go get it?
It's not. No. I got people.
You got people.
I got people.
Okay.
They'll get it.
Okay.
Okay. Change presenter. That'd be me. Okay. Okay. And okay. So we never did make it up to 2709. Got to 2708.
Pretty close though.
Daily double. Yeah. Just missed it. Any Crude ever get a move on? No. Well, it will. The swing high was 30. The trigger's up a bit. So, yeah, that still may happen. And this may not be done. I mean, you got a leg, a little retracement, and a leg, and a little retracement. We could just run into another leg. Is John here?
Let me go look. Nope. John is not here.
Okay.
Nope.
Okay, I already walked through this once. We'll go through it again. Yesterday, Fed announcement comes out. Boom. They don't raise the interest rates, but more importantly, they don't change the language. And that's key. The part about we will continue... here, I wrote it down yesterday. Let me scroll up a bit. The language that was left out, I don't remember the exact wording of that, but then he did say when he was doing the Q&A, he said inflation would be the only reason for future rate increases. Now that's more than just a change of the language, because at the last Fed announcement he said, you know, we gotta keep raising the rates, and now he says we don't have to keep raising the rates unless inflation comes into play. I don't know how they're going to unwind the balance sheet without raising rates, how they're going to make all that money they created out of thin air disappear, which is, most people don't realize that, you know, quantitative easing wasn't the end of the deal. That was the beginning of the deal. You inflate the ball and then you got to deflate the ball. So, deflate gate or inflate gate.
John just popped in.
All right, John, welcome to the show.
Hang on. Let me open his mic up.
I got
There
it.
he is. Okay.
You there, John? All right. He'll pop in here in a second. Okay. Let's take a look at the Concierge Trade Alerts for last night. I'll do that real quick. The S&P said to consider being long 2694. Now that came out at 9 p.m. Eastern. Oh, that's going to be 2100 hours, which is going to be right about there, right there. So we were looking again to be long 2694, which is right here. Hello, John.
Hi there. Sorry.
Welcome to the show.
Introduce
bless you.
myself with
That's
a
okay.
cough. Right. Well, you know, we got an awesome market going on again today, especially in the semiconductors, which I've been talking about, are leading the market higher. They're pretty much at the highs for the last 2 or 3 months right now. Nvidia, which has been really beaten up very badly, came down and made a beautiful double bottom here yesterday or the day before, and has made a terrific recovery. And that is a really big deal. Came down to pretty much not quite the lows, but it's put in a huge head and shoulders bottom.
Which one?
Probably worth having a look.
Which one?
NVDA.
NVDA. Okay. There we go. That's on a daily.
Yeah, I mean, that is a pretty powerful look. The last time this stock got beaten up, kind of lost at about $100, I think. it recovered, actually going just before it went and made a new all-time high, kind of had a correction, and then it went soaring about $30 or $40. I actually think, depending on how the markets go, if we continue in this roaring bull market we're in right now, we could certainly go up and test the 200 level, test those gaps. Obviously, there's a lot of work to do to turn this stock around, because it's been totally beaten up. Meanwhile, Xilinx, which is the new kid on the block, the new Nvidia, if you like, is just about making all-time highs here again today. And KEYS, Keys, is did make a new all-time high today, so very, very strong, both these stocks. We were talking about T-Mobile yesterday. It's up another $1 today. Up another $1 today. Looks dynamically bullish, with an underlined. I don't think it's going to be long before this stock is hitting 75, 80, 90, 100 more. I mean, look, to go to 100 is a big deal because it is a telecom, and they're pretty highly capitalized. But nevertheless, it certainly looks like there's a dramatic breakout coming for this company.
I think you're right. You just got to get up above the 75 area, 70, 75.
Yeah. If it gets past 75, it's got a real good shot of going 80, 90, or in doing a BlackBerry deja vu type of thing, like we were talking about yesterday. Something really, really dramatic happens for this company, possibly even a takeover, where it would be, acquired for $100 or something or more. I wouldn't rule that out either.
Who do you think would take over T-Mobile?
Possibly somebody like General Electric that's sort of struggling to get something
to find their identity in the digital age.
It could be, or maybe Microsoft, or even Google. I mean, Google's got a phone company, makes phones, and would be very. It's kind of like Dell buying disk drive companies. Why buy them from another company when you can make them yourself? And that's what they did a while back, and it would certainly make sense for a phone manufacturer to buy T-Mobile, and being that it's the leading telecom, the leading cell company right now in terms of its performance, it would appear to have a lot going for it.
Who makes the handsets for Google, the Pixel? Who makes those phones?
I don't know. It might be. Well, I think Foxconn's got some of it, and there's T-Mobile may. I mean, they just acquired Sprint, but having acquired Sprint, look at the performance of the company. So
apparently it's HTC.
Oh, there you go.
Now I don't know much about HTC. What's the story on them?
I don't know either. I have to do some work on that. But when you look at Apple, for God's sake, Apple could acquire a phone company. I mean, Apple's got them. These companies that are high market cap. I mean, if I was a CEO of Google or Apple or any of these, I'd snap this up in a nanosecond. And the last time I said something like that was back in 2000, when there was a stock at about $8. It was one of these emerging medical companies that was fighting cancer, and there were about 8 or 10 contenders back then, and I think Merck had taken a stake in, kind of bet on all 10 of them, if you like. And this was right before the big surge, and that stock, which I wrote about, ended up going to $132. So, I was kind of right in my approach. Sometimes you can see an opportunity to get in, to get involved in a new sector that has tremendous upside potential, and you can nail it. And look, Microsoft in the 2000s, even though they tried to buy Yahoo at $32 or so. Probably, they made a few mistakes along the way, but and they've righted themselves now in a way that nobody saw coming. But again, you know, probably Microsoft buying this company would be a fantastic fit, because it would give them massive exposure to a sector that is just destined to keep growing. and remember, you know, T-Mobile has a, I mean, T-Mobile is kind of like the Huawei of the US, if you like. Another way of thinking of it, now it's potentially got a better product than its competitors, and it's just not the USA, it's the entire world is its oyster, and it's back, you know, it's got big German investment. I think there are a lot of things going on in Germany, so, you know, when there's not much risk really to acquiring a company that's performing as well as T-Mobile is right now. When you think about it,
this is HTC. This is HTC up right now. This thing is there's.
I got to take this one. Sorry.
Go ahead. Go ahead. So the stock transfer agent for HTC is in Taipei, Taiwan. Huh. Now, this is not a U.S. traded company. Doesn't appear to be. HTC Corporation. Still there, John?
No, that's me.
Oh.
No, John is off on the phone call.
Yeah, I know. Yeah. Okay. Now, apparently, if you're in the U.S., see if there's a... So you can buy shares in HTC if you are interested in buying such a thing. 24.98. That's what we got up. This is interesting. Stock symbol. I figure out what exchange you're on. Data is provided by ICE. Okay, moving right along. Okay, important prices, important areas, almost always tested. So we got two important prices, important areas right here together. We've got what was the swing high of yesterday. Actually, overnight. The overnight session swing high was right here at 2691.75, right inside of the weekly trading zone. Then we have the weekly trading zone itself. And then we have the Concierge Trade Alert to consider buying 26.94. And we ran up. High was 27.08. How did I compute that? I don't know. 6. Oh, I added 6 and 8, and that made 14. So 14 S&P points. Now pulling back to 26.94 again. It would appear. And we may see 91.92. Question is, on this pullback, will support hold? Got a couple reasons for it too. With the trading zone and the higher the session, it was resistance becoming support. That would play out quite well, which would give us a leg and a retracement, and that retracement would then set us up to put in another leg. And there's a very high if we begin to build an up leg, very high probability that we go back to at least 27.08. And if we take out 27.08 and move up into this section of the zone, then we could scurry right on up to 27.35.36. Now, this thing, the way it spread out across the zone after the news yesterday was interesting. When we have these type of news events that send the market up like this, the Fed interest rate is the biggest of all news events. We had news this morning. In fact, kind of a crazy number. Where's that? Oh, I've got it here, I think. I do. Here we go. Yep. Here we go. There it is. U.S. home sales. They were forecasting 560,000, and it came in 657,000, which beat the forecast and the previous number. And that's a pretty big beat. So apparently that weighed in this morning. So we had a continuation of good news. But the fact that this thing took off this morning, I'll be the first to say I wasn't expecting that. I wasn't anticipating that. But when it happens, you either go along with it or you can just not participate. But it's always right in front of you. Not what you think should happen or what you wish would happen, but what is happening. And we can go back to this bullish cross yesterday morning at 5:30 a.m. Eastern. And we did the leg and the retrace and the leg and the retrace and the leg and the retrace. Now, if you were in this move all the way up, now you got an exit signal here, but then the news came out, and we make a point of not trading news events. In fact, we do the opposite. We get out of the way, let the news do what it's going to do. So we then pulled back. We got a little bit of a head fake this morning. We got a bearish cross, which was just a function of the market trying to reach back to this weekly trading zone. And then, after the head fake, the real move came, and you can see where it's taken us. So at any time, with the exception of this right here, about an hour to an hour and a half, call it an hour and a half, it appeared that prices would go lower, well, and they did, right down to the weekly zone, which you have to expect to be good support until proven otherwise. Just like on the way up, you expect it to be resistance, expect it to be resistance, expect it to be support when price is coming the other way, until proven otherwise. And so here's the proven otherwise part. Boom, retracement, back to the zone, and they continue up. So did this steer you right the whole way up? Pretty much. Blue and climbing, all up through here. Now here, you'll see that these two did not track, and the move was pretty shallow. Now we're kicking it up a notch. We got to watch is right here at the 50-yard line. Is it going to hook back down? Is it going to go leg, retrace, leg? Watch it and see. Price is attempting to come back to the 26.94 and ultimately the 91.92. Question is, will they hold? And we'll find out. All right. Now, the S&P and the Dow took a little bit of a different path today. You see, we're still well below the highs put in yesterday on the Dow. The opposite is true of the S&P. I'm telling you, this is a rare occurrence. You will not see this very often, unless this is suddenly the new normal. You know, maybe we got a new normal on our hands, but I don't think so, because that relationship of them moving together. Now, there's no one that leads. Every time someone learns to trade futures, the first thing you want to know is, okay, Dow and the S&P, which one leads? Because they're always going in the same direction for the most part. So if there was one that always led, wow, that would be like a secret recipe for printing the money. But unfortunately, that's not the case. So we are pulling back into this 870, 875 as we pull back into this. But just remember that these two are not in agreement. And there's no, well, one's always right. Sometimes the S&P is playing catch up. Sometimes it's the Dow. Last night on the Dow, Concierge Trade Alert, we said to consider No, it hasn't. Do you hear me, Michael?
Yeah.
No, nothing's been changed. I've changed nothing. I can't remember the last time I was in there. A week or two ago.
Okay. Something's going on.
I don't know.
Okay.
See if it lets me in. Yeah, log me in, okay. Okay, so anyway, I'll log out.
Okay.
Later on, I'll figure it out for you.
Oh, let me give it another shot right now.
Okay. Okay, back to the Dow and the Concierge Trade Alerts. Consider selling 24,830, and we got down to a low 24,796. So 830 is about right there. About a 30-point drop. On the long side, we were looking for 25020. 25020. Yeah, that's up awful close to that weekly zone. Wouldn't intend to put one that close, but I did, and so there it is. Ran right up against the zone, and it turned us down. The Russell, dancing to the beat of a different drummer, although it's tracking with the S&P more so than the Dow. On the Russell, we were looking to buy 1495. Which is right about here, and it looks like the Russell's going to come back and test that area. 1495. And the swing high so far, the initial run up was 1501.7, and then we finally made it up to 1502.8. So I have 1501. That's 6 points for the Russell, $50 per point. Next, the NQ. On the NQ Concierge, I'm going to hit mute on your.
Oh, I got it.
Okay. On the NQ, consider being along 69.20, which is way up here. $20-ish. Okay, 69.20, and the swing high so far 69.43. So that's 23 points. So that's $460 for the NQ. $20 a point.
That's John.
Hey, Dr. Tom, welcome to the show.
Hey, how you doing, sir?
Happy Thursday.
Happy Thursday to you, too.
Well,
This is a weekly holiday.
a weekly holiday?
Yeah, we have annual holidays, right? So
Oh, sure.
every Thursday is a weekly
Oh,
holiday.
yeah. Yeah, it's like we're on holiday.
Mhm.
How very British of you. Well, how about that Fed?
Well, backtracking, aren't they?
Say again?
It seems like they're changing their tune.
Oh, yeah, the language more than changed. He went on to say that there would be no reason to raise interest rates further unless inflation comes into play.
You know, they're supposed to be so independent and everything. I wonder if they have really been influenced by what the president's been saying.
I think he wants to hang on to his job. I do. I really do. I can't blame him. I mean, that's,
It's a good job.
Folks, for those that don't know, this is Dr. Tom. He joins us every single Thursday, almost every single Thursday at this time. If you have any questions regarding gold, investment grade gold, anything that we talk about, put it in the chat box. I'll be happy to put it to the good doctor. And in the meantime, go to CFRNgold.com, CFRNgold.com, and get your starter pack and learn more about investment grade gold. So, welcome to the show.
Hi there. Back again.
Dr. Tom just joined us.
Oh, hello, Tom.
Hello, how are you doing, John?
Not too bad. Well, feeling vindicated because of the gold price going up. You and I and Dwayne, all three of us, I think we've been pretty bullish on gold. Sorry, I got to get this. Sorry.
Go ahead. Go ahead, Tom. Whatever you were talking about with as far as the Fed or changing the language or whatever it is you want to talk about today.
Okay. Well, just to comment on what John just said. He has been saying for weeks now that gold is going to take off, and I keep getting messages from people about how strong gold is. So he's a good prognosticator.
Yeah. What do you want to talk about today?
Well, I have some information on the question, is your money safe in the bank?
Well, define safe.
Well, I'll do that in the PowerPoint, but can you put a question out to everybody? Just a general question. Do they think their money is safe in the bank? And see, kind of poll and see how many yeses and no's you get.
Do you think your money is safe in the bank? Safe in the bank. Send to all. Okay. All right, guys, feel free to answer that. Do you think your money is safe in the bank?
Now, are you using the polling function in GoToWebinar, or is that just a text question?
I'm sorry?
Are you using the polling function?
No.
No,
I didn't use the poll function. I've never used that. You want me to? I can.
Well, I've never figured out how to do it, but it can't be that hard. You're a lot better at this GoToWebinar stuff than I am.
Oh, the last time we used it apparently was, do you believe hyperinflation is possible in the U.S.?
Ah, so you actually did do that as a poll then.
Well,
okay.
Apparently I did. I didn't recall it. Let me pop it out. So you can pop it out. This says select a poll. Manage polls. Guess you got to manage polls first.
Yeah, you create a new poll is what it does. It'll bring up go to webinar page and type in create new poll.
It's so nice to have smart people like Michael around, isn't it?
Let's see. You have to...
So the answer would be yes or no.
So, Michael, you must be a lot younger than Dwayne and I.
Not a lot.
Not a lot younger.
It's usually the younger people that are more technical. I have a friend. She says that everybody being born these days have a chip in their brain, and
that's an interesting theory.
Well, I know by the time my daughter was 3 years old, seriously, she was better on the computer than I was. I had to work to catch up with her.
Wow. Yeah, there.
Okay.
They're certainly exposed to a lot more now.
It says it's
that's
distributing
nice.
the poll right now. Whatever that means.
Okay.
Okay.
So you and I don't get to vote. Organizers and panelists don't get to vote.
So far, 7% of folks have voted, 11% have voted, 14% have voted, and we have 100% no. So far.
Okay. Well,
We got one yes.
I got a 17% yes.
Oh, yeah. And that's 100%. Everybody's voted.
This is pretty cool. I don't remember using this before, but I guess I must have tried because it
well, I've
said I
never
had
seen it
saved.
before.
Oh, let me drag it out so you can. There, you can see it.
No, I can see it on the screen now.
Oh, that's right. Yeah, you can, can't you?
Now, can you show the results? Does it?
Well, the results are up here. Do you see it on my screen?
No, you won't. You have to take a screenshot of it and show them the screenshot.
Oh, that's okay. So basically, to do a poll, you just go to the poll area and click it. It takes you to go to webinar page, and
Poll must be closed to enable screen sharing. Okay.
I see.
So far, we're 90% no and 10% yes.
Okay. Should be calm.
Hey, John.
Just
Yeah, we're
just
still-
one thing more I got to do. Sorry.
Go ahead, Tom.
John said he needed to do something.
Oh, he didn't mean us.
Oh, okay. All right. Well, why don't you go ahead and flip it to me for the presenter then?
Yeah, let's do that.
I got it.
Here you go.
Okay. You're the new presenter.
He's got to accept or something like that.
Yeah. I'm not seeing it. Usually pops up right in the middle of the screen.
Yeah, there it comes. I still had a click left on my end to do.
Okay.
Nope. Not getting it?
I'm not seeing it. No. Why don't you take it away from me and then give it back? Sometimes that makes it happen.
Okay.
So this session is being recorded, so I better tell the truth, right?
Yeah, sure.
I always do anyway.
We're big on that. Yeah. Okay, got anything? No?
Not yet.
Here, let me just take the charge back. That's still not my chart. Okay, try it again. Okay, so we're going to close the polling 55% because I think that's messing up our screens.
I think that's what it is. Yep.
So we got to close. So far, 55% of the folks voted in 3 minutes and 33 seconds. We got 81% no, 19% yes. So
All right, we'll find out who's right.
Interesting to hear from the folks who. All right, I'm going to send this back over to you one more time, see if it works.
Yep, that's what it was. The poll was still open. It was
Okay.
It was keeping us from changing presenter.
You got it now? Yep. Oh, yep.
Okay.
There you go. So,
All right, is your money safe in the bank? Well, oops.
the slide up is not bankrupt. Yeah, there you go.
There we go. Okay.
Nope, you still got not bank robbery up.
Yeah, that's my first slide.
Okay, all right.
Yeah, it's not bank robbery that's going to get you money. They've gotten pretty good at it.
Warren Beatty's got a nice gun for the era there.
Yeah, he does.
A little bit ahead of its time, right?
Yeah, I didn't notice that.
So you're saying that's out of era?
What movie is that?
I can't tell. I don't know. I just found the picture, but
like remember the Titanic movie?
Yeah.
And it was kind of a bit out of place with that guy who had the sort of 20th century gun, or not the 20th century, like late 20th century gun in a sort of a 19th century movie, you know.
Every once in a while you see things like that. So if your money's going to disappear, it's not going to be robberies. It's not going to be natural disasters. It's going to be erosion. Okay. The dollar actually eroding. Even though you got the same number of dollars in the bank, they're worth less. So I talk about it as a cancer of inflation. It's eating away at our economy, devaluing the dollar, all your investments, all your CDs, your bank accounts, the cancer of inflation. For the first 170 years that we existed as a republic, believe it or not, there was no inflation. I mean, there were some inflationary times, like during a war. That's when the government borrows money, and then there was some corresponding deflationary times. But essentially, if you average it out, for the first 2/3 of our existence, we were flat for inflation, and that just seems so odd because in all of our lifetimes, we've had inflation. But for the last 80 years, we've experienced continuous accelerating inflation. So what changed? Well, in 1933, if you'd asked the average man on the street what inflation was, he wouldn't have any idea. But FDR changed all that with a stroke of a pen when he took the U.S. off the gold standard, and I call it, he invented modern inflation. And since that time, the dollar's lost 96% of its purchasing power. What does that mean? It still looks like a dollar, right? But it takes 25 of them to buy what $1 bought in 1933. So we've gone from being the most prosperous nation on earth with the most respected currency to the most indebted nation in world history. We were a creditor nation. We lent money to everybody. Now, everybody lends us money, including little banana republics. If a country in their central bank owns U.S. government debt instruments, that means we owe them money. Here's the CPI over the last, roughly 10 years. And of course, if you looked at a picture of it going back to 1933, it's pretty much the same picture. But for some people that say to me, well, we used to have inflation, but we don't anymore. Well, here it is. And this is government figures. This was what caused it. It was an executive order. People think that Congress took us off the gold standard. No, it was FDR. He published an executive order. And as you see, people used to go to the post office to get their mail. So he posted this in all the post offices around the country. Same place where they would post
looks pretty official.
It's an actual picture, and as you can see, it's from the Postmaster General. He's at the very top. Postmaster, please post in a conspicuous place. So this is the head postal guy to all the postmasters in the country, and they put this up in the same place where they put in the FBI's 10 most wanted people.
Right.
They should have put FDR's picture up there with them. Now, let's look at the way early presidents thought about debt. Thomas Jefferson, our third president, he says, I place the economy among the first and most important Republican virtues, and public debt as the greatest of dangers to be feared. To preserve our independence, we must not let our rulers load us with perpetual debt. Well, he could have been a prophet, because that's exactly what's happened. Not only has it been perpetual debt, but it's been increasing perpetual debt. Believe it or not, most of the homes in this country are owned by the government. When I speak in churches and colleges and so on, I'll ask how many people here own their house, and most people will raise their hand. And I'll say, how many people still owe on their mortgage? And most of the same people have their hands up. Very few people have paid off their homes. And I tell them, you don't own your home. The government owns your home, because until you make that last payment on the mortgage, they could take your home away from you. You say, well, I didn't get my mortgage from the government. Well, you might not think that you did, but you did. You get your mortgage from a local bank, and then they turn right around and sell it to Fannie Mae or Freddie Mac, which used to be referred to as quasi-governmental organizations. In other words, they had some of the powers of government, but they were private entities, supposedly. But then they used the 2008 crisis as an excuse to take over Fannie Mae and Freddie Mac. So roughly 90% of homes in the country are financed through those two organizations. History shows us that the U.S. kept its debt in check, though, until the presidency of Andrew Jackson. He was the last president to serve who left us with little or no debt. He actually left the office with the country in debt just $18,000. Now, $18,000 was a lot more money than it is today, obviously. But contrast that, the total national debt was $18,000. When a president comes into office, he's given $3 million just to remodel the Oval Office. Okay. So Obama did that. I don't know if Trump has done it, but I know that I saw pictures of the Oval Office when George Bush left, and it was in great shape. You know, there was no stains on the carpet. There was no wallpaper peeling off the wall. And yet Obama spent the full $3 million redecorating the Oval Office. By contrast, Andrew Jackson didn't live in the White House for his first 2 years as president. You know why?
Why?
There was a leak in the White House roof that made it uninhabitable, right? So his advisors told him, well, you're the president, just borrow some money. And he said, no. He says, debt is for times of war. That's for when you have to take a loan out. I don't have to live in the White House. So he lived in Blair House, which is now the vice president's mansion these days, former Naval Observatory. Mm-hmm. And for 2 years, he waited until the country collected enough taxes to fix the cotton picking roof. And then he moved into the White House. And by the way, he had to furnish it himself because most of the furniture was destroyed. The country didn't pay for it.
Right.
So here's the equation. This is how we get into inflation. Obviously overspending. Every year that we spend more than we take in, which is every year, we have a deficit. Now, you've probably heard people say that Bill Clinton was the only one that's ever reduced the debt in history, right? In recent modern history. That's not true, okay? They say that, but it's because people confuse the deficit with the debt. What happens is that, let's say we spend $1.1 trillion and we take in $800,000 or $800 million.
Okay.
Billion.
Right.
Sorry, there you go. Okay. The difference between that is the deficit. So there were 2 years, I believe it was, where the deficit, there was no deficit, where we actually took in more money than we spent. But that didn't mean that we had no debt. It did lower the national debt. Okay? If there's a deficit, it adds to the debt. If there's a surplus, it lowers the debt. So that's true. But as far as getting rid of the national debt, that hasn't happened since Andrew Jackson. It just keeps getting bigger and bigger and bigger. So we overspend. We end up with what's called deficit spending. Roughly 40 cents of every dollar we spend every year is debt. The other 60% is mostly taxes, but also fees that the government takes in for various things like charging people to take down trees in the national forest, things like that. So that is our national debt. When the national debt goes up, we have more inflation. When we have more inflation, the dollar declines and gold rises in price. So if you remember that equation, you understand what's happening and why, unless there's something major that happens, we'll never see deflation, because every year the dollar becomes worth less. Now this is an old chart, but I kept it because I couldn't find anything newer, and it still illustrates the truth. Back in 1970, gold was at $37 an ounce, and the U.S. debt was $370 billion. Now that seemed like an awful lot of money to people in those days, but 370 billion is a drop in the bucket compared to almost 22 trillion today. By 2008, gold had got to 865,000, and the debt was at 10,700 billion, right? Or $10.7 trillion. Now, look at the percentage change. That's the main thing. From 1970 to 2008, gold went up 2,238%, and the debt went up 2,792%. Pretty darn close. So there is a definite, clear correlation between the debt and the price of gold, and gold is a good reflection of inflation. So here's what our government tells us. They tell us that inflation is normal and acceptable.
Right.
They
Yeah,
say,
the Fed has been telling us that every meeting, like for a long time. And,
yeah, it's what's wrong with it, right?
Yeah, Tom, there's a couple of things if I could just.
Sure, of course.
You know, you're dead right about the Clinton thing. I mean, what happened was, you know, mostly because he cut back on the basis and put the country in jeopardy that way. They managed to get the deficit briefly. You know, they managed to get a couple of positive years. What happened was there was a lot of hype about how they could, you know, get ahead of, you know, pay all the debt back. That never happened, and ever since then it's gone into a death spiral. The second thing is that, and this is very important, you know, there's times when all of a sudden the deficit matters, and a lot of time when it doesn't. We're coming off a period now where for the last couple of years the deficit has not been on the radar because the economy is doing well and it just is not there. But when the last time gold took off was you know, in the 2016, you know, after the bottom, the reason, you know, that was when we had the 30-year, the biggest move up in gold stocks in 30 years. That was when the reason for that was the deficit went through 19 trillion, and for some reason a whole lot of things came together right then, and that was one of the reasons why the gold went up so much. Then after that, you know, the deficit seemed to fade into as we had this, you know, once Trump came in and started getting the economy going well, the greatest performance ever by any economy, really, in what he's done. Nothing short of astonishing, especially creating 15 trillion in household in net increase in wealth, almost. But what I think is partly behind the surge in gold right now, and is that we're closing in on 22 trillion. We're only literally a few billion away, and I think there's going to be a lot of just, you know, there's also how the media handles it. There was, you know, when we went through all these numbers as the gold price was going down from 2011, you know, 16, 17, 18 trillion, didn't matter kind of thing, right? Right. All of a sudden they fixated on 19 trillion, and there was a huge amount of media about it, and that's partly what really pushed gold up so dramatically, you know, off that low. We're coming off another low right now. We're about to go through 22, and you know, 22 is a number that most people didn't see coming as quick as it's here. So I think that you know, because of the financial volatility and everything, they're more likely to fixate on crossing 22. There could be a lot of media exposure, and that could be a big driver behind the gold price. In addition to that, the Feds helped yesterday by coming out with this very dovish statement, and as I think I said, you know, recently on the show, the biggest thing out there that people don't understand is you know, I have to go back to the 70s. You have to ask yourself, why did gold go to 875? Just one sec, sorry.
While he's catching that, I'll just comment that one of the other reasons why the economy did better under Clinton is because of Reagan. You say, well, how can that be? There was another president in between them. The economy doesn't move like a speedboat. You can't make hard turns. The economy moves more like an aircraft carrier. It's huge, it's cumbersome, and it takes time. So I believe that a lot of the reforms that Reagan put into place when he was in office actually flowed through and helped out Bill Clinton. And if he had been able to do what he campaigned on, which is reducing the national debt, it would have even been greater. That's the one thing that, as much as I admire Ronald Reagan, that he didn't do. He wasn't able to keep his campaign promise. I believe the debt was $800 billion when he took office, something in that neighborhood, and everybody was just horrified by that amount. Now we long for the days when it might be, you know, below $1 trillion. But in any case, he did a lot of good things to the economy, and including lowering debt and regulations, same stuff that Trump is doing now. And that did help the overall economy, and that effect continued for the next 10, 15 years. Okay, back to you, John.
Yeah, thanks. Sorry about that. I apologize for the interruptions. It's just one of those days, you know.
I was just telling a joke about you, that's all.
Okay. So I think that the 22 could be a big deal, and may focus a lot more attention on the deficit. Another thing I wanted to say is, you know, while everybody's been asleep and they're not really paying attention, the U.S. economy is currently pretty much at 21 trillion right now, which is, everybody thinks is an 18 and 19 trillion economy. It's not. It's a 21 trillion economy today. And there's some very intriguing projections. You know, at some point in the next decade, maybe 2025, something like that, China will probably go ahead of the U.S. economy. By 2030, it's almost for sure going to be bigger. By some projections, India could be bigger than the U.S. by 2030, which is amazing. But that number I was looking for the other day Dwayne, on the debt clock. I found it. The reason why
Oh, you
I didn't find it the other day was because I was expecting it to be in red, but it was in green. But for some reason, they had it in green along with a whole other bunch of other stuff. But the actual interest on the debt right now, it's not as bad as I thought. It's about 340 billion, something like that. But obviously, so going back to the stimulus thing, going back to the 1970s.
Excuse me, what is that as a percentage of revenues?
No, that's the actual. That's how much it cost us to maintain the debt
Each year. I mean,
each year,
how
yeah.
much is that figure as a percentage of all of our spending?
Well, you know, if the it's about 10%, because if the a little bit more than 10%, because sorry, less than 10%, because if our budget is 4 trillion plus, and the interest is 340 trillion, it's a billion. It's not making that much of a difference to the budget.
Right. It used to be 18% of our budget. That's the reason I brought that up.
So it's come down. It's come down quite a bit.
It has come down because interest rates have come down.
Yep.
Interest rates go up, it can become really unsustainable.
It could be catastrophic, and I'm coming to that in a minute with my explanation. So, you know, we went into a somewhat of a depression in 1974. We definitely hit a depression in England because the market lost 90% of its value, and it took a huge amount of effort to revive the UK economy. They got hit with the oil crisis and everything, and the market got cut in half from 73 to 74. And then think about this, because it's very, very important. I mean, I know we were a market with, 1/20th of the value today or more back then, but it still took an awful lot of work by the Fed to prevent going into a depression. So in 74, from 74 to 75, the market actually doubled. Imagine that happening today. Imagine the market going from like 25 to 50 in a year, right? Right. Well, effectively, that's what happened back in 1974, 75. And then we maintained this sort of salary. We went back to 1,000. But all that stimulus that it took to do that, 4 years later, 5 years later, resulted in in inflation coming into the economy, and because they probably took on a lot of debt to do it, and just like you've been saying, and we had an 8 times increase in the gold price off the lows of 1976 from 104.6 to 875. I believe we're fast forward to today. And 2016 is 1976. In other words, the 5 years, the 5 or 6 years it's taken to to get the economy out of the 2009 slump is not just the 1974-75 all over again by the Fed. In my view, it's the Fed to the power of 10, because you not just had the Fed, you've got Japan, China, Europe, and the UK. Plus the Fed, who pushed in about $30 trillion over that period. And the implications of that, I believe, are propelling the economy forward in a way that most people are scratching their heads and saying, how come the economy is so strong, even though the market pulled back? And there's so much momentum in the economy, and there's so much stimulus that if the Fed is wrong, and they are already behind the curve. And listen, there's another reason why gold is going up. Smart money is betting on inflation coming. There's no ifs, ands, or buts about it.
Yes.
Starting to see early signs of wage inflation, price inflation, and it could come from behind with a vengeance. That's what happened in 1979. When interest rates went from 1% to 21%. Nobody thinks remotely that anything like that's going to happen today, but it actually could, because there's so much stimulus in this economy that if it's like pouring gas on a fire, and I've gone through the 87 sort of look-alike, or deja vu 87, you had a tremendous start to the new year, just like this year, and then we continued into February and March. We didn't have a correction until April, May. We had a double 10%er, and then the market went up 30%. The dollar went into a death spiral, and the bond market, the bonds were plunging as well. So we interest rates started rising, and they drove the market dramatically higher. They also drove gold prices dramatically higher. So and why would the economy soar if the Fed starts raising rates? Because it tells you, the Fed raising rates tells you the economy is too strong. And that is a distinct possibility later this year, because the fuel for the economy, the best fuel for the economy right now is a weaker dollar. If that happens, the U.S. economy is going to go through the roof, and it could go right into the 20s. I mean, it would be paradise for Trump, because if the economy is growing at 5, 6, 7% going into 2020, he'll have a landslide bigger than Reagan, and there's a very good chance that that's going to happen, especially if this Fed guy has gotten a memo, and does what he's supposed to do. So, and there is this Neil Kashkari, who's the head of the Minnesota Fed, who has a plan to to supply $5 trillion in credit to the economy and monetize the debt, and that is a formula for mega growth, the likes of China, and it is really something that could happen. I mean, if it does happen, it would be a fantastic thing for the economy, for everybody who's living today, and be great for the world. It'll be a boon to end all booms. And I certainly see, especially if Trump gets reelected, there's probably going to be a honeymoon period of the first 2 years going into 22. But after, and then look, gold and the economy can go up together. I believe we've started that phase right now, where some inflation comes into the economy. It's very good for growth. It's good because it gives some pricing power to the companies, and the economy benefits from it, because the growth gets factored into the inflation gets factored into the growth. However, and actually, gold could go up to 2,400 or so during in the next couple of years, and then sort of consolidate maybe for a year or two while the economy roars ahead in 2021, 22. But come 22, that's when we see the accelerated phase, where the dollar goes really into new lows probably, and because they're going to pay the piper sooner or later for all this debt, and the dollar goes down the tubes. But the market rallies actually. Well, the market's going to get into trouble. There might be a similar kind of thing to 87 and 22. But that's when gold, so you could have a scenario where gold soars to in 23, 24 to 8,750, and the Dow maybe briefly dips below 10,000 in some sort of a crash, and just they kiss each other at the same price, which happens about every 50 years, and then the market recovers and gold peaks, and we start a whole new cycle, and we go into what I believe is going to be the roaring 20s of the 21st century, when all these incredible innovations that are just embryonic today, like automated driving, jetpacks, flying planes, flying cars, and everything like that, are going to become central to the economy, and also the transformation of energy and how to each individual house, instead of they're going to be gradually the grid will become less important, and homegrown energy will be more important, maybe with a fuel cell as well as solar and wind. There's going to be a huge just like solar has, solar isn't the biggest part of the economy by any means, but it is important in terms of what it's contributed so far. Certainly created a lot of jobs, but to go to that extreme where just every house in the land eventually becomes self-sufficient in energy is a transformational thing that would be incredibly positive for the economy, because it would create just massive amount of jobs, and obviously the energy gets cheaper over time. Then it becomes a compelling transformation from the grid to home-based energy, and
Kaiser Permanente has built a huge hospital out in the Antelope Valley in California, and it's a 0-0 hospital. It needs no outside energy. They recycle their own water, and so on. If they could do that in a huge hospital that has thousands of beds, they could certainly do that in homes.
They're doing it. Look, Apple's new headquarters is pretty much self-sufficient in energy. Microsoft, there's a company that specializes in large-scale fuel cell generation, and they're a lot of the mega companies are using that, are pretty much independent of the grid, thanks to these fuel cells. And eventually those fuel cells are going to be the size of an air conditioner, a window air conditioner of the old days. And, you know, every house will just buy their own power unit. And that's, you know, an idea whose time is already well overdue, because, you know, when the power goes out in conditions like today, it's terrible. I mean, it's diabolical to have the power go out for any time today. It's just misery. And you know, the other thing is the introduction of 5G is going to be the other transformation, because it's going to get rid of all the wires, and ultimately we get rid of all the electrical wires in the grid. And and by the way, you know, that makes the country safer for possible you know, damage to the grid by hostile forces.
That's true. I was just talking to a friend about the possibilities of cryptocurrency as far as poverty. Something like a third of the people in the world have no banking, and if they have a cell phone with cryptocurrency, they can have banking. Well, right. Why is it that these places have no telephones? I mean, telephones have been around since forever. It's because they don't have the money to put up the infrastructure. It's not just putting up the poles and the copper wires. You have to have access roads to get to those. So
no, all that's going to change. All that's going to change hugely before too long. And you know, the infrastructure is the spatial, you know, the space infrastructure to make that happen is probably not that far away either. Where, you know, look, the phones are getting cheaper and cheaper and cheaper, and all we need now is the juice to power them, and the signals, and pretty much the whole world. It brings it to the whole world, and eventually they're going to get the energy, you know, as well, which is going to be transformational. So it's coming along. It's a tough assignment in the remote areas, but it's coming.
Well, even I think it was 10 or 12 years ago, I was on a speaking tour in Europe, and I would just talk to just typical people like our tour guides and whatever, and they were telling me that most people, even back then, didn't have landlines. It would take them 6 months to a year to get a landline installed in their apartment, where they could go down to the store and get a cell phone right now. So that was even happening way back then. So, you know, the Dick Tracy wristwatch radio, that's actually going to happen, where all our communications are going to be on our person. I mean, I still got hard lines in my office because I have 4 telephone lines. I don't want to have to be passing around a telephone, so, a cell phone from one person to another. But yeah, it's going to save a tremendous amount of money, and just the money it costs us to maintain, say these cables for international calls under the ocean. We don't have to maintain them anymore. They just abandon them, because it'll all be done by satellite. But right now, we're spending a lot of money on things that we don't need to be spending money on. And when you don't, then it will expand our prosperity.
For sure. And you know, the other big thing, the other hidden benefit, which is just ginormous out there, you know, which the internet provides in one form, is communication, and secondly, clever guy called Mark Zuckerberg, basically by putting WhatsApp together, it has enabled, you know, unlimited communication worldwide on a platform that's just, you know, invaluable. I mean, you can't even put a value on it, because it's going to become so. I mean, he just owns the world with that platform. Period. There's nothing like it, and it's probably going to morph into, you know, as more of this 5G comes into play, it's obviously going to play very well for Facebook.
Yes. If they can get away from all their problems with spying on people. There was just a new story out today about them tracking all these people, tracking all their movements.
But it's still there's still a lot of value in it to them. That's a huge hidden revenue source. And listen, they own the space, and as long as they don't screw up too much, they're probably going to go back to all-time highs within a few years or higher. From where they are today. So because they're supposed to be coming out with record earnings this week, I guess, or next week, and if there's an upside surprise, it could be very, very big. It could be a very big deal for Facebook. Because at the end of the day, do you really think? I mean, if the company's minting more money than ever, who cares about the other stuff? It's just gonna get forgotten about.
Yeah. Okay. Well, back to the debt.
Yeah. Sorry to interrupt.
No problem. But it was all very interesting. But, it's no big surprise that the government lies to us.
They have a habit of that.
They tell. Yeah, it's sometimes with some of these government officials, it seems like they lie when it would be easier to tell the truth. That's called pathological lying. But anyway, they tell us that inflation is normal and acceptable. It's not. They say, well, there's actually government ads about not being in debt and so on, and reducing your debt. So they say it's bad for us to be in debt, but there's no problem with the nation itself carrying a massive debt. And the best example of this was the bailouts after the financial panic of 2008. I was at a church service where most of the young people there were homeschooled. And homeschooled kids are pretty sharp, I think. So I gathered them all around and I said, I want to just ask you a question. What if your parents told you that you were just terribly, terribly in debt, that you're about to lose your house, that your cars can be taken away, that your credit cards are all maxed out, and we've been borrowing money from one credit card to pay off another credit card, but Uncle Joe has said he's going to come in and help us, and he's going to give us a huge amount of money. And what we plan to do is just spend like crazy. We're going to spend a whole lot of money, and that will take care of our financial problems. I said, what would you think if your parents told you that? And these kids, homeschool kids tend to be very polite. They didn't want to say anything bad about their parents. I said, no, this is a hypothetical. What would you think? He said, well, we think our parents were crazy. I said, well, what would you say if I told you that the government thinks that we can spend our way out of this huge crash? I say, well, I guess the government's crazy. And that's exactly the truth. Because the government told us with all the TARP and the other bailouts that the best way for the nation to deal with an economic crisis is to spend its way out of the crisis.
Well, we have a sitting president who did exactly that in his own personal life.
Yep. And people always ask me, well, why isn't Donald Trump doing anything about the debt? I said, well, think back to the campaign. What did he campaign on? He campaigned on strength of the military, jobs, trade, getting rid of bad agreements like the Iran agreement, and so on, helping businesses. Did you hear him talk about lowering the debt? No, you didn't.
Nope.
So for all his strengths, he doesn't. He was a businessman that built his business on debt.
That's right.
So he doesn't think of it as a negative thing. I think of it as toxic, and I think history will prove me out. But
the huge difference right here is every one of his companies that became indebted and could not survive, they became toxic, as you say, because it was a corporation. He would bankrupt the corporation and walk away.
Yeah, exactly.
As a nation, we don't have that luxury.
Yep, he's a very smart guy, and you'd think he would realize this, but and as we'll get to in a little bit, it's not just a Democrat or Republican problem. They're both at fault. I have a friend, he says that we used to have the party of big government, the party of small government, and now we have the party of big government, the party of bigger government. So the Democrats still spend more. I mean, Bush had, I think, something like 5 or 6 trillion added to the debt during his 2 terms. Obama had more than any president has ever added, which is $10 trillion in 8 years. So the debt was around 10 trillion when he took office. That means that the first, 43 presidents in 220 some years had managed to accumulate 10 trillion in debt. He added another 10 trillion in just 8 years. So it was more than Bush did, but both of them were at fault. And I think we're going to continue seeing, on average, if Trump is in office for 8 years, we will probably see another 8 trillion added to the debt, because he's on track to add about $1 trillion deficit every year. At some point, we have to pay the piper, because at some point we won't be able to pay even the interest on the debt anymore, and we will go bankrupt. So the government tells us the fact that goods
are we not struggling to pay that debt even now?
Well, as John and I were talking about,
the government just ran out of money; they had to shut down.
Yeah, right. But the interest on the debt used to be, just a few years ago, about 18%. I think it was maybe 8 or 10 years ago. It was 18% of all the money that we spent. And what does that mean? It means that in over 30 years, we haven't paid down the debt at all. I mean, you could say that we paid down the debt a bit under Bill Clinton for those 2 years. But since then, it's every year deficits, no surpluses. So we just keep adding to the debt, adding to the debt, adding to the debt. At some point, it breaks. At some point, we can't. People think, well, we'll just keep printing money. You can't just keep printing money. That's one thing. We have this image in our heads, this printing press they always show us on TV, where the printing press is cranking out all these $100 bills. Mm-hmm. That's bogus. Every time the government issues money, whether it's digital, which is over 90%, or whether it's paper money, which is, I think, only 6 or 7%. However they produce it, it has to be backed by debt. Okay, the money used to be backed by gold, but now it's backed by debt.
Right.
So here's an interesting thought. If the government did, by some miracle, borrow money from the people on Mars or something, and pay off the national debt, we wouldn't have any money in this country, because all our money is debt-based. Do you ever think about that?
That's true. Yeah.
So anyway, the government tells us, don't worry, the fact that your goods and services cost more every year is insignificant, because salaries also rise every year. Well, first of all, that's not true.
Not true, yeah.
They don't always rise to keep up with inflation. But even if they did, what about the people that are on fixed income, that are, drawing Social Security or pensions, or living off of fixed income on bonds, something like that? Those are the people, the most vulnerable people, that get hit the worst. And they tell us that the Federal Reserve notes, even though they're backed by nothing, are just as valuable as the U.S. gold certificates were. Because up until 1933, if you had a $20 bill, it was worth 1 ounce of gold. You could go to any bank and exchange it for 1 ounce of gold. So here's a question from the U.S. Treasury website. They have a Q&A section there. Look at it yourself. What are Federal Reserve notes, and how are they different from United States notes? United States notes were the ones that were backed by gold or silver. Answer: Federal Reserve notes are not redeemable in gold, silver, or any other commodity and receive no backing from anything. What a remarkable statement for the government to make. Our money is backed by nothing. This has been the case since 1933. The notes have no value for themselves, but for what they will buy. In another sense, because they're legal tender, Federal Reserve notes are, quote, backed, unquote, by all the goods and services in the economy. But what does that mean? You know, I can just sort of wave a $20 bill through the air and I get stuff. You know, it's only worth something if people will take it. So think of it like musical chairs, okay? Only we're passing around a $100 bill and the music stops, and the last person that's holding that $100 bill, that, you know, that as it was passed around, he gave something of value to somebody else who got $100 for it. And then the music stops, and now the $100 bill drops in value by 30 or 40 or 50%. That's what happens in countries that experience hyperinflation. The last people that get stuck with the money get hurt. And the people who are smart enough to buy something of real value, hard assets like real estate, like precious metals, whatever, even bullets, you know, whatever, something that would survive in a financial crash. They're the smart ones, the ones that are holding the money. By the federal government's own admission here, are left with nothing because they're only backed by all the goods and services. So we used to have real money. Here's a picture of a gold certificate. Most of you have never seen one of these. The government pulled most of them in when they confiscated all the gold. They confiscated roughly 40% of the wealth of the country because people on average had about 60% of their wealth in their home and 40% in gold. Now, they might not think of it in gold, but they had 40% in money. So money in the bank was backed by gold. Money in their pocket was backed by gold. So when he confiscated the gold, he also confiscated the gold certificates, and he took 40% of the wealth of the country and put it in the government treasury. That's why Fort Knox had to be built, to house all the gold that FDR stole. It wasn't built as a military base. They built a military base around the vault. So if you look on the left there, you see gold certificate. This was actually redeemable. At the top it says this certifies there have been deposited in the Treasury of the United States of America. Then down to the bottom, $20 in gold coin payable to the bearer on demand. Well, if you find a gold $20 coin from that era, it's a 1 ounce coin, and it's got $20 printed right on it. That's what people spent until they had the gold certificates. And some people were still more comfortable with the hard gold. But in any case, they all got confiscated. Now, if I go to a coin show and buy one of these $20 gold certificates, if it's in good condition, I have to pay $200 for it. Not for its monetary value, for its collector value, because there's very few of them left in good condition. Now, here's the money we have today. They tried to make it look the same. They both have Andrew Jackson on them. But look, instead of the gold seal, we have the black seal of the evil empire, the Federal Reserve System. Okay? And what does it say on there that you can redeem it for? Nothing. It says Federal Reserve note. What is a note? A note is an IOU. Okay? So what they're saying is that I owe you $20 worth of something, and if I can pay it, if I have the ability to pay it, I'll pay it. That's the only government's only promise. Whereas here, the government's promising to give you something real, gold. The people that turned in their gold certificates or their gold coins back in 1933, today, you know, they were given a $20 Federal Reserve note like this one. Today, that Federal Reserve note is worth about 5 cents, based on compared to 1933, and that $30 or $20 gold coin is what was the last quote I saw, about $1,325 an ounce for gold. It's not actually 1 full ounce of gold. It's a 1 ounce coin, but it's 0.9675% gold. The rest is copper to strengthen it so it doesn't wear down or bend or scratch easily.
Right.
So if you look at the two of them side by side, the first thing that strikes you is the difference in the seal, right?
Mm-hmm.
Second, you see on demand, okay, gold coin on demand. So it was a demand note. It was real. It's a certificate. You see the word gold there in 4 different places. And then down on the bottom one, we see the word note twice. That's it. It's legal tender for all debts, public and private. That's the only promise they make you. So
it also says Federal Reserve System down below. Does it say that on the top one?
No, because the Federal Reserve wasn't started
Right.
until 1913. So yeah, we had gold certificates for many years, long before the Fed was started.
You see that seal there? It says Federal Reserve System on it.
Yeah, United States Federal Reserve, exactly.
Okay.
And even though the Treasurer of the United States signed the bills, it's not the United States that's backing this. You don't see anywhere on there where it says that the United States is backing it. It's the United States Federal Reserve System. The Federal Reserve System is a system of private banks. Again, quasi-governmental, but the only control the United States has over it is that we have to approve whoever's going to be the head of the Fed. We don't even control who's in charge of the 12 banks that make up the Fed. Ron Paul tried to get that to be a condition. He wanted to have an audit of the Fed, which the Fed has always refused. And he wanted to have not just the chairman of the Fed, but the heads of all the Federal Reserve banks confirmed by Congress. They refused that too. So if they're part of the government, how can they refuse a demand of the government? So this is Ben Bernanke. He was, pretty well known. He was the chairman of the Fed for quite a long period of time.
Helicopter Ben.
Yeah, exactly. Ben basically made a public statement saying that money's free. He says the U.S. government has a technology called a printing press. This is an exact quote that allows it to produce as many U.S. dollars as it wishes at essentially no cost. And he went on to joke about, all it takes is some paper and some green ink, and we can make all the money we want. So what is he saying to the people of this nation? Your money is worthless. That's what he's got to say. Now, here's a former Fed chairman, Alan Greenspan. He was also a longtime Fed chairman. And before he became the chairman, actually before he joined the Fed, he crossed over to the dark side. He was an honest economist. And in a book he wrote, he said, in the absence of a gold standard, there's no way to protect savings from confiscation through inflation. Deficit spending is simply a scheme for the confiscation of wealth. Okay? So,
I remember that.
If it's a scheme...
Right. Well, let's watch them see what comes up here.
I think Garrett just wandered in.
Okay.
Hey, Garrett. Oh,
Hello.
Garrett.
Yeah.
You sound like you're in a tunnel.
Really?
Hey, how about now?
Oh, you sound better.
There you go.
Hey, Dr. Tom's in the middle of a presentation you'll probably find very interesting. Say hello.
Hi,
Garrett.
Dr. Tom, how are you?
I'm fine. Garrett and Barrett. They sound alike.
Yeah, you guys could do a road show.
This up. Yeah, right. I'm actually just wrapping this up, but I was given a quote from Greenspan that I think I heard you say. You've heard him say this, but deficit spending is a scheme for the confiscation of wealth. Well, I spoke at the International Money Show. There's like 5,000 people there in the audience. And I said to him, I said, who could create deficit spending? And they all looked at me like, oh, I don't know. I said, well, we can't. You know, if all 5,000 of us went up there and tried as hard as we couldn't create deficit spending. Only the government can do that. And so if it's a scheme to confiscate wealth, it's the government who's doing the scheming. Okay? I'm not trying to be a conspiracy theorist here. I'm just stating facts, baby. Okay? Greenspan himself, again, this was before he crossed over to the dark side. This is before he joined the Fed. He said that deficit spending is a scheme to confiscate wealth. So how do they do it in practice? The government doesn't do like it did in 1933. It doesn't come around and take your gold and your gold certificates away from you. They're much more sneaky about it now. Deficit spending causes inflation, and it effectively lowers the national debt. So they're confiscating our wealth by reducing its value, and at the same time, it reduces the government's obligation to pay its debts. One more quote from Alan Greenspan. I love this one. Listen carefully. The fact that our economical models at the Fed, the best in the world, I should have underlined that. He said, we have the best economical models in the entire world. The fact that they've been wrong for 14 straight quarters does not mean that they will not be right in the 15th quarter. And he said it with a straight face. I mean,
let's see, have been wrong for 14 straight quarters does not mean they'll be right in the 15th quarter.
Yeah.
The fact that he's taking responsibility, the fact that our economic models at the Fed,
the best in the
world, have been wrong for 14 straight quarters does not mean they will not be right in the 15th quarter.
When did he say that?
I don't know.
I would have to look that up. But that was when he was chairman of the Fed. He was in office at that time. I'll look it up once we finish the PowerPoint.
Okay.
Yeah, that's always important. You know, with respect to economic things, you know, my question is always when, because of the long wave cycle. You know, I mean, if you ask grad students how you perk up the economy, you know, they say, well, you increase the money supply and lower interest rates. And you go, well, yeah, that's good, but that wouldn't have worked in the late 70s, would it?
Right,
you know?
Exactly. Interest rates were already sky high. But,
yeah.
You know, I probably should have put the year on here, but to me, it was just the statement itself. Here's this guy, he's got the nerve to say, we've got the best economic models in the world, but they've been wrong for 14 straight quarters. But don't let that worry you, because they might be right in the 15th quarter. It's just ludicrous.
My guess is that first comment may be a little self-aggrandizing. Maybe you don't have the best economic models in the world. Of course, you know, I guess the two ways to. The other thing is you might have the best economic model. The trick is having the guy who knows how to read it.
That's true too. So I make this statement many times, and people always. Not always, you know, but a lot of times people say, no, that's not right. But the U.S. government is committed to inflation, okay? The massive bailouts we've done and will continue to do contribute to inflation. The Federal Reserve is injecting huge quantities of money into the system by buying treasury bills. That's a classic inflationary move. I won't go into it here, but the concept of fractional reserve banking, just real briefly, allows a bank, if I deposit $1,000 in the bank, it allows that bank to lend Garrett $10,000 based on my 1,000. Okay?
Right. Right.
And
what a house of cards.
If Garrett deposits that money, say he borrows it from Bank A where I put the money in, if he put that money back in his account in Bank A, it wouldn't be a real big problem. 10 to 1's bad, but, you know, it's not momentous. But if he deposits in Bank B, and Bank B takes that 10,000 and gives Dwayne a loan for 100,000, now we start to have a problem. And that if Dwayne takes his money and puts it in another bank, and that bank then
hi Dwayne,
$1 million off, you know, basically $1 million is ping-ponged off my $1,000 deposit. Okay, so that's why I say we will never have deflation, because the only way we can have inflation is an increase in the money supply. And the Fed brags about it. They did a white paper called Modern Money Mechanics. It was published by the Chicago Fed. And they brag about the fact that 60% of the money these days is not created by the Fed itself. It's created by local banks. When you go down and get a loan or a mortgage or whatever, when you sign on the bottom line and the bank official signs the bottom line, you just created 90% of the value of that loan in money that never existed before. You created money out of thin air. And I try to explain to people, and they say, that's impossible. How could you create money out of thin air? I said, you can't, but they do. Okay. And that's what fraction reserve banking does. So we inflate the money supply. If that's what inflation is, then deflation is deflating the money supply, which means you'd have to pull all those loans back in. They call it calling the loans. So inflation, folks, is not increasing prices. Okay, that's, you ask 99% of the people in this world, like, well, inflation is prices go up. No, no, no. Inflation is just what the word said. It's inflation of the money supply. It causes prices to go up. Okay, but that's why
now they're trying to make that money disappear, correct?
Yeah, I mean, they could try, but as long as it was only owed to people in this country, the great majority of the debt was owned by people in the United States, then they could just say, well, we're going to wipe it out. But years ago, people in the United States started getting smarter and stopped buying Federal Reserve or Treasury bills and notes, right, and so on. Mm-hmm. And so now a huge amount is owned by other countries. So if we just decide to say no more, there would be some kind of war. It might not be a shooting war, but it would certainly be an economic war. Even PIMCO, which was the largest holder of government debt in the world, for several years, they stopped buying U.S. Debt instruments. You can imagine that. This is an old chart, but it's very illustrative of what we've done to ourselves. If you look off on the right, you see the different colors. The Marshall Plan, we spent huge amounts of money bailing out Europe after the World War II. The Louisiana Purchase, I mean, buying a whole state, you know, the race to the moon, the savings and loan crisis, the Korean War, the New Deal by FDR, the invasion of Iraq, the Vietnam War, hugely expensive. And NASA, we spent tons of money trying to conquer the universe. All of that put together doesn't even come close to the money that was spent. It's not even half of the money that was spent during the bailout of 2008. So our deficit is exploding. This was a chart, and I found this one. It was kind of interesting. This was the CBO, which is they advise Congress on financial matters. Congress, by and large, doesn't have a clue. They were projecting, with Obama's first budget, the biggest deficit ever in the history of the world, in the history of the United States, in 2009. And they were pretty accurate on that. And they also, as we'll see here later on, they were projecting by 2020 that, let's see, so the typically it's nonpartisan, the CBO, but in reality, it's controlled by whatever party's in power. They have influence over. So if anything, the chart figures I showed you were low. The projected deficit, which is 5 times greater than any in history, doesn't include any of the cost of the healthcare or energy plans that were now, at that time, before Congress. This was, statement was done 10 years ago. And the CBO said these will add trillions of dollars to deficit. And this was, again, this was actually originally created 10 years ago. The CBO stated that our national debt, the national debt is more than doubled. But like I said earlier, it's not a political thing. The Republicans, until Washington gets serious about financial sanity, it's up to us to protect our own families from debt. And they're basically our biggest enemy in the world. The Communist Party over there as the enemy.
As the devil dog.
Yeah. So
we're all
the Bible
indentured servants as a result of this business.
In family of 4, one boy, one girl, one mom, one dad, and one dog, you know. You understand? It's not their mortgage.
Right.
It's not their credit card debt. It's not their student debt. This is their share of the national debt. I ask you, how many people are planning on sending the government a check for $250,000 to pay for your share of the national debt? And surprisingly, no one ever raises their hand. Okay. So there are no sure things in the financial world, they tell us all the time. But here's one thing that is sure. The U.S. government has announced that it will double our national debt. Okay? How do I say that? It's because they've made it clear that they're going to continue to inflate the money. So remember the formula. Debt up is dollar down. Dollar down means gold up. It's just that simple. So what should you do with this information? Well, realize that your savings could become worth less and less over time, probably will become worth less and less, and could, if we had hyperinflation, become worthless. So you should position yourself in investments that are not dollar influenced. Look at gold. It's always been the ultimate hedge against inflation. Dwayne directed you to CFRNgold.com. If you go there and request it, we will send you the Gold Education Starter Package. Some of the most valuable information you'll ever see about precious metals. Get it. At least read it and watch the videos, because it could save your financial life. And then here's some other free resources. You can write to webinars@comcast.net. You can go to conservativetruth.com and read these articles, In Debt We Trust, The History of Money. You don't need to go there for the 10-10-10, but because that's included in the Gold Education Starter Package. And in particular, read the non-federal Fed. I made the statement that the Federal Reserve System is not owned or controlled by the United States. There's proof of it in that article. And then we do webinars on all aspects of investing in finance, including how to use gold as a hedge. So you can go to christianfinancialconcepts.com to see that. That's what the website looks like. On the left, you can register for webinars. The next block over is, you'll see rotating. That's static. That's a screenshot, but it will be the last 10 webinars will be rotating. And then there's also articles and podcasts there. So christianfinancialconcepts.com, and definitely get the Gold Education Starter Package. It is an eye-opener.
Well said. Well said. Still there?
Well, thank you. I am.
Okay. Okay. Was that your last? Was that the last slide?
Yes, it is. I'm sorry. I should have said that. I was just getting a drink of water.
Oh, okay. All right. So I'll pull the screens back.
Yeah. Let's see if anybody has any questions.
Yeah, anybody have any questions? Well, Mike had posted earlier, Dr. Tom, the Fed carries the largest amount of the government's debt. Why don't they just forgive it, or most of it, like a year of Jubilee?
Well, they could do that. There's been all kinds of talk about, crazy ideas like creating a $1 trillion coin. The government can create a coin and say that it's worth $1 trillion, at the mint, because they determine, the 1 ounce coin used to be valued at $20. Today they put a value of $50 on it. The what's called the American Eagle. So they could just as easily, make say a platinum coin, maybe make it a big one, like 5 inches in diameter or something like that, and put a value of $1 trillion on it, mint up 22 of them, and pay off the national debt. But number one, everyone would know that's bogus. It might be, they might make it legal. Congress can make anything legal they want to, even if it's unconstitutional, as they've proven many times. But that still doesn't take care of the problem. Your listener's correct that the Fed now owns most of the national debt, but still there's a huge amount owned by other countries. The reason the U.S. dollar is what's called the reserve currency of the world is WRC, the world reserve currency, is because a huge percentage of all of the assets in the central banks of the world, and remember the central banks in most countries are owned by the country. That's not the case here. We don't own the Fed. We allowed private bankers and politicians to pull a fast one on us. But in most countries, the central bank is owned by the nation. So if we just basically wiped out all the debt, it would be considered an act of war by at least 100 countries in this world that hold significant amounts of U.S. dollars. We'd be wiping out most of their reserves.
Right. So, if we can't trust the banks, who can we trust?
God.
Yeah. God, guns, and gold.
God, guns, and gold, right. Well, God's the one that gave us gold. If you look at Haggai 2:8, it says very clearly, the silver is mine and the gold is mine, says the Lord of hosts. Now, when you first look at that, it sounds kind of like a silly verse. God doesn't do silly, but I mean, it sounds a little silly because other places in the Bible it tells us that everything belongs to God,
right?
Even the sun and the moon and the stars. So why would he specifically pick out those two things? Why did he say the hummingbirds and the tangerines are mine, says the Lord of hosts? I believe he was giving us a direction, because throughout history, go back and study economic history, you'll find that every nation that's backed its money with gold and or silver has prospered, and every nation that has gone on a pure fiat standard like we are, paper money, has crashed and burned. Now, here's an interesting little factoid. The average lifespan of a paper money has been 37 years throughout world history. So why has our money lasted for 86 years now, not being backed by anything? Well, it's because we're the world reserve currency, but we're fast losing that status. It used to be 90% of all the assets in central banks around the world on average were US dollars. Now that's down to 60%. If we get down below 50%, then what John was saying earlier will happen. China will become the dominant economy in the world, and they've talked a lot of times about an international gold-backed currency. There's also been talk, mostly speculation, about the yuan itself, which is also called the renminbi. being the world reserve currency. I personally don't think that'll happen, because that's not what you hear the Chinese government officials and the finance ministers talk about. What you hear them talking about is a gold-backed currency. Why? Because they've been accumulating gold for decades, most of it secretly. All right, and so they would love a gold-backed currency because it would boost their economy tremendously because they have so much gold.
Gotcha. So what other options do people have besides banks?
Well, become your own banker. Buy hard assets, buy real estate, buy precious metals, and don't trust paper. What you guys do makes a lot of sense, because you don't buy and hold
it's purely a trading vehicle.
Contracts.
Yeah.
Yeah. You make money with it. And what most traders I know do is, as they make profits, they don't keep rolling all their profits right back in. They take their excess profits and they buy gold with it, because they're not always going to be trading, right?
That's right.
So, one day you might want to retire.
Yeah. True story. It could happen. It really could.
So, any other questions there?
Nope, that's all I've got.
Okay. Well, it probably is time for me to say goodbye then. And I'll look forward to talking with you next week.
Well, as always, we needed to, I'd like for us to talk before then, if you have some time.
Oh, sure.
Yeah,
give me a call anytime.
Let me give you a call. And as always, a pleasure having you on the show. And I know that people will do some deep thinking about what you've said about the banks. There was a comment earlier about, well, your money's safe in the bank up to $250,000. That's the FDIC. The only problem is the FDIC does not have enough money to make everyone whole. If there was, if one individual bank goes under, they can stomach that. But if all banks go under, or if there's some national crisis, they just simply don't have. That's another house of cards.
8%, Dwayne.
8%.
They've got enough money to cover 8% of all of the losses they're required to cover. So how do they get more money? Well, they have to go to the banks and assess them, because the banks pay for the FDIC. It's not funded by the U.S. government. The government runs it, but they assess the banks so much for every dollar they have on deposit. Well, if there starts to be a widespread crisis and a lot of banks are crashing, the banks are not going to have the money to pay into the FDIC, and the FDIC will collapse. Now, technically, the government is the bank of last resort, so to speak, and the government would come in and cover the losses. But if there's a general overall financial crisis, the government may not be able to do it. So please don't trust the banks with your money. You have to keep some money in the bank to pay your bills with, but it's foolhardy to have a large share of your money in the bank, if for no other reason than the fact that it's losing 4 to 6% every year. So if you're making 1 or 2% on your CD, you do the math. You're losing several percentage points a year on your money. And our banks could do the same as some of the European banks could do, which was to go to ZIRP, as it's called, zero interest rates. And they let you put the money in the bank to supposedly keep it safe, but they pay you no interest on it. Or some of them are going to what's called NIRP, which is negative interest rates. You don't want NIRP or ZIRP, guys. You don't want the bank to charge you money to keep your money in their bank and keep it supposedly safe, while at the same time the money is being deflated by inflation. The value of it's being ruined. So keep your money safe. Get it out of the banks, put it in gold, put it in land. I think the best way is in commercial real estate that's in the path of development. In other words, it's where the development is heading, not so much in improved property like houses and commercial real estate, because traditionally they have not held up as well.
If you own the land where the next post office or Walmart is going, you did good.
Yeah, especially Walmart. Walmart spends millions of dollars investigating where they're going to put their supercenters. Mm-hmm. And every place they put a supercenter is designed to service 250,000 people. So I've been doing what's called land banking and buying land in areas where Walmart has either applied for a permit or has recently built a supercenter, because you know that the land around that is going to go up in value. And I'm making like double-digit returns.
That's fantastic. That's really good. Yeah, because once a Walmart goes in, or even they put up a sign, new Walmart supercenter coming, it just rang the bell on every one of those properties surrounding it, because there's going to be, you got all that foot traffic coming into that Walmart, day in and day out. What retailer would not want to be in that shopping center?
Yeah, and by planning ahead like that, I'm buying land anywhere from 20 to 30% below the market price. Okay.
Yeah, your money's made the day the sign goes up, practically.
Yeah, I've already made money on it, but then when it's sold, I'm making probably over 20% a year.
That's fantastic. That's really good.
Yeah, we'll have to talk about that one day.
Yeah, I'd like to. Well, thank you so much, Dr. Tom. Folks, go to CFRNgold.com, get your starter pack, and you'll know what we're talking about when we say investment grade gold. Thanks, Dr. Tom. See you next week.
Thank you. God bless everyone.
Bye-bye. Okay, guys, we have run a bit over today, and that's okay, because we do that on Thursdays. I'm sorry Garrett didn't get a chance to come hang with us, but maybe he'll be back, I don't know, maybe tomorrow. See if he wants to come back. Now, as traders, we all have a struggle, a difficulty, if you will, with one thing, many things, but one of those things is being patient, which you can wrap that up with being disciplined, right? Don't need to be patient. Now, when I first started trading futures, if I didn't have at least 2 hooks in the water, I didn't feel like I was alive. But I soon learned that was a fool's way. James 1:3-4 says, when the way is rough, your patience has a chance to grow. So let it. You're closer than you know to becoming the person God wants you to be. By His enabling grace, you'll make it through this trial, whatever it is, and come out stronger and wiser. Paul said in Romans 8:31, if God is for us, who could be against us? God is for you. He's for me. He's for us. He created us. We're His children. He's Abba Father. That means whatever it is you're afraid that you can't do, you can. The prison bars you're beating against are in your own mind. Now, since you put them up, you're probably going to need God's help to take them down. Because God wants to set us all free from the fearful attitudes that hold us back. God wants to release us to live life to the fullest potential. The right attitude can overcome almost any barrier. Now, there are days in your life, I know in mine, so let's talk about yours. There are days in your life where a hangnail will cause you to just break down and cry. To throw up your hands and say, I can't go on. And there are other days when you're just on top of the world, tap dancing through life. Someone near and dear to you could get slammed by a bus, and somehow, on that day, you'd rebound. You'd deal with it in some kind of graceful manner. You'd be sorrowful, you'd be sad, but you'd deal. Unlike the day when you have the hangnail, and it leads to a nervous breakdown. We've all had these days, and they're coming at us unless we do something about it. The right attitude can overcome almost any barrier. For example, the Bible says in 1 Corinthians 13:8, love never fails. Why is that? Because love isn't dependent on your emotions or circumstances. It's a servant of your will. Love is a decision. Jesus said in John 15:12, this is my commandment, that you love one another as I have loved you. Now, if he commands it, he will enable you to do it. Beginning is usually the hardest part. Showing up, as they say. The journey of 1,000 miles begins with a single step. After that, it actually gets easier. But beware, old attitudes will try to resurface and come back stronger than before. You and I, we have to stand up to them and not let them. Radio legend Paul Harvey said, you can always tell when you're on the road to success because it's uphill all the way. So be patient. It will take time to get there, but anything worthwhile is worth waiting for. And that's our good word for the day. Thanks so much for tuning in. Reminder, tonight, Thursday night, 9 p.m. Eastern, Partners Workshop. Hope to see you all there. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.